Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Russell Rhoads, Director of Research over at EQDerivatives. We're going to focus on Nasdaq-100 versus S&P 500 performance, which of course means we're also going to take a look at the Nasdaq-100 Volatility Index as well as the VIX. Russell, it's great to see you as always. Welcome back to Trade Talks.
I'm always happy to be here on the first Monday of the month. I always know it's a new month when I see ya.
It's a good way to start the month, that's for sure. Exactly. And your favorite thing we'd like to talk about is, of course, volatility comparisons. What are you taking a look at in both indexes?
Well, the Nasdaq one, I think everybody's aware the Nasdaq 100's underperformed the S&P 500 this year so far. And it's something that showed up in the volatility of NDX options versus the S&P 500 options kind of caught my eye last month and continues to be something I focus on. And that is typically in February and March, we have VOLQ kind of calm down relative to VIX and go to a discount. Also, historically, whenever we've had geopolitical uncertainty, and let's just say we're there right now, whenever we've had geopolitical uncertainty, VIX tends to rise to a premium relative to VOLQ. Well, February was a month where we only had one day, the last day of the month, where VOLQ moved to a premium relative to VIX, and now it's back at a slight, I think it's actually at a slight discount at the moment relative to VIX. And the fact that they've started to come back together makes me think that the Nasdaq 100 and tech stocks they're getting ready to start playing catch up with the other major market indexes. I think maybe now might be a good time to be taking a look at tech stocks.
Yeah, it's really interesting because, as you know, it seems as if traders are more concerned about the fundamentals behind the tech stocks than they are necessarily with the geopolitical concerns. And then, Russell, I also wonder if it's because of the makeup of the SPX versus NDX. Of course, the Nasdaq 100 doesn't have financial exposure, right? We don't have that much energy exposure in the index either. So we see what's happening with the financial stocks. I wonder if that's what's causing an elevation in volatility with the SPX as well.
Well, I most definitely think that the different components and the different makeups of the two indexes really do lead toward people thinking there's more risk in the S&P 500 than the Nasdaq 100 at this time of year typically. But right now, it seems like the concerns about the S&P 500 are geopolitical. And I think maybe folks that are a little concerned about the Nasdaq 100 are more concerned about things going on in the U.S., much more of a U.S.-centric outlook, where higher interest rates are not necessarily good for tech stocks. Inflation may not be very good for tech stocks as well, and people have been on the sidelines. But as we got into March, started to see a lot less put activity on the NDX relative to call activity, whereas in January, there was a lot of put activity relative to call activity. So it looks like either people have their hedges in place, which can be bullish for an index, or that they're not as concerned about the Nasdaq 100 from this point on. And we also saw a really nice run in the last couple of weeks of February for NDX as well. So we're starting, even though it's been underperforming, I do think that the balance of this year, I think at minimum, we'll see an outperformance of the NDX versus the S&P 500, if not some really solid performance, depending on how the second half of the year and all the geopolitics work out as well.
Right. And Russell, you know, it's so interesting. We just had our friend JJ Kinahan at TD Ameritrade on right before you. And we were looking at the monthly investor movement index, which pulls together TD Ameritrade investor portfolios, what they're trading, what they're selling, what they're buying. And it was interesting. The top 5 buys for the month of February were Microsoft, Apple, NVIDIA, you know, kind of like all your main Nasdaq 100 components. And it was interesting to see how they kind of viewed that as more of a flight to safety than other buys and sells that we've seen throughout the past year.
And that is showing up. And for full disclosure, everybody, she did not tell me that we were going to talk about this topic. So I don't have the names off the top of my head, but I do believe 6 of the 10 stocks that are most widely owned by institutions as of the end of February are big Nasdaq 100 components as well. So it's not just retail investors that are taking a look at the sector. It looks like institutions have been using this as a chance to get exposure to some stocks that have had just stellar performance over the last 5 to 10 years.
It's funny how that content just kind of comes together without any prep behind the scenes. All right. Well, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.